Hello and welcome to Let's Talk Business. Markets tumble by more than 1% amid global negative cues. The Sensex closes around 64,500 and the Nifty really shut below the 19,300 mark. Now Tata Steel, JSW Steel, TCS shed the most. All sectors contribute to the drag, including heavyweights like, of course, banking, financials, IT and metal sectors. My colleague Hirul Dadia joins us with all the market action.
A day of sell-off is what we've seen in the markets and the fourth consecutive session of close. Sensex saw a cut of almost around 800 points, little over 800 points, and Nifty ended with cuts of around 260 points, ending below the 19,300 mark. Now, if we talk about Bank Nifty, that was pretty much in line with benchmark indices, but you had broader underperformance that did come in from the mid-cap as well as the small-cap index, where the Nifty small-cap declined 3.5%, whereas the mid-cap index fell nearly 2.6% in trade. It was metals, media, as well as banks and real estate sector that corrected the most in trade today, and the PSU Bank Index was the top losing sector. The breadth was absolutely in favor of the declines as well. In fact, you just had an M&M and a Bajaj Finance that were the top gainers in trade, whereas on the losing end, you had names like LTI Mindtree, Adani Enterprises, Hindalco, Adani Ports, as well as a UPL. Let's quickly look at stocks which saw an earnings reaction today. Lloyds Metals was weak. Lotus Labs missed estimates for a fourth consecutive quarter. That was under pressure. RPL Bank was under pressure. Credit Access Grameen saw a big move. Amber Enterprises, Mahindra Holidays, PNB Gills plunged over 14% as the losses have widened, and Kotak Mahindra fell on concerns regarding a smooth succession of the new CEO. In terms of newsmakers, you had sugar stocks that were under pressure, so Dhampur, Dwarakesh, Bajaj Hindustan, as well as the Sri Renuka. Ipca Labs, on the back of the positive surprise with regards to Ratlam site BI classification, was in focus. TCI was in focus on the back of an order win. Aditya Birla Fashion and Retail on the back of an acquisition. Aurobindo Pharma on the back of FDA approval for testosterone injection. Genus Power again on the back of an order win. BSE actually hit a record high in trade today. And you had oil refineries that declined on the back of the GRMs that have risen 70% week on week in Singapore. So clearly a lot of stock specific action, but a major sell-off that has happened in today's session, whether this continues or not, is something that we need to wait and watch. And as we know, it is a truncated week, so it's going to be interesting to see how markets open on Wednesday. Back to you.
What is happening with banks in particular this quarter is the key factor. The central message seems to be that net interest margins will go down. Everybody from a ICICI to a Kotak to a smaller names like Equitas or a Poonawalla, all of them are saying that net interest margins will correct. Now what happens when margins are coming off, right? When margins come off, the profitability of a bank goes down. Now how can the profitability be protected? If the bank is able to attract money from depositors like you and me at a better rate. That happens. So therefore that bank which can do that is a stronger liability franchise. So therefore it seems to be a simple answer that money will go towards stronger liability franchises. The trust factor is very high in PSUs per se. So you would believe that PSUs are stronger liability franchises. But the point being, the recent rap on the knuckle to one of the PSU banks may cap the valuation upside. And therefore private banks come into the picture. In private banks case, the advantage is that the valuations are in their favor, and therefore even if they don't perform too well, underperformance seems to be difficult. And you just take a look at what the average target prices for each of the private banks is, and you will get the answer that at least the valuation and the analyst view is in consensus for some upsides for the private banking space. So between the two, maybe private banks, but can they give returns here and now for the next 3 to 6 months? That is a doubtful question.
Meanwhile, Nepean Capital's Gotham Trivedi says he prefers private banks over PSUs and NBFCs. Hear his rationale and let's listen into what he has to say on this.
I think what has surprised is the fact that the banks have done exceptionally well of the results that have come out in the last about 10 days or so. And the fact is that a lot of these private sector banks are trading at, very low multiples. So I think I would still put my money into private sector banks, maybe an SBI or one of the other PSUs, but my bias has always been towards the private sector banks versus PSU banks.
This quarter, there is an unequivocal commonality in the con calls of almost all banks that NIMs have corrected and will contract further. Could that be a hindrance or do valuations take care of that?
if you go by history, unfortunately or fortunately, you've seen PSU banks trading at a significant discount to their private sector peers. And there are reasons for that. I think the prime reason being the fact that, PSU banks, senior managements don't have stock options. They are not apparently not fully incentivized to, take tough decisions. And, there's a certain culture within PSUs, period, not just banks, that is not very profit-oriented. But I think the FM and the Ministry of Finance, I think in general, are very clear that they want PSU banks to be focused, and not just PSU banks, I would say all PSUs in general, to be more focused on profits, be more diligent, at least as far as the banks are concerned, on giving out loans. And I think, as you said, one of these banks did have an issue. They need to spruce up their processes 100%.
All right, now JSW Steel's Q2 revenue and net profit beats estimates. The company reported a net profit of over 2,000 crore rupees versus a net loss of 917 crore rupees. While speaking to BQ Prime's Neeraj Shah, the joint MD and CEO Jayant Acharya paints a positive outlook, says that the company is on track to increase the steel production capacity to cater to the 100 million tons demand India is expected to see by 2030.
Do you, as somebody who's leading India's largest steel company, still go ahead at full throttle with the capacity expansion plans that you have, or are you moderating that a little bit? How do you think about it?
No, we are not moderating at all. And the reason is that India is on a very strong growth path. Our sense is that 8 to 10% growth in terms of steel demand is something which is very much possible. So you will add incremental demand of 10 to 12 million tons every year, which means in the next 7 years to end the decade, we would probably have 100 million tons of extra demand. So therefore, we need to add capacity. We are on track to add capacities in India. Next year, we will be at 37 million tons. Our capacity expansions at Vijayanagar BPSL is on track. Additional debottlenecking in Vijayanagar will also happen during calendar year of 25. So we should be 37 million tons in India and 38.5 million tons globally.
All right. Laurus Labs' September quarter profits slumped 84%. Now margins contracted substantially as well. BQ Prime spoke to the founder and CEO Satyanarayana Chava, who tells us why the company's profit and margins took a hit.
The reason why our numbers look lower, see, we did invest in cell therapy. Our associate company is also making losses, so we are absorbing that losses to the shareholding what we had. And we gave research grant to IIT Kanpur to continue their gene therapy assets. And we also invested a lot in new facilities which are fully equipped, fully manned, but no revenue coming from. So you are aware, we never wanted to capitalize any of these expenses. So all those were absorbed in Q2. So that was also one factor for numbers are not so attractive. The one where we always concerned and worried is if our gross margin is going down, that's a big concern. So sales is somewhat external and somewhat internal both, but whereas gross margin is absolutely internal. So that shows our quality of business. Despite of not getting significant revenue share from CDMO, we maintained our around 52% gross margin. That's the quality of the business. So our profits are going up. If we sell more, we have more revenue. Despite of less gross margin, we can increase our profits.
All right, we brought you the highlights of the mixed earnings bag so far. Of course, a truncated week for markets in the week ahead. But we'll be back with more news and updates after a very short break.